Hi YouTube, and you just ask you all to smash the like button on this video, and if you're new to the channel, please subscribe. It's the DIY Investing Guide channel. In this channel I'll just give you a weekly update on my Freetrade accounts. Both my stocks and shares are always sat on my general investment account. So yeah, if you look like sort of Freetrade portfolio updates, and I also do individual company videos on stocks that are on my watch list and businesses that are on my watch list. So please hit the notification bell as well, and to see future videos and subscribe to the channel. There will be a link to a free share in this video, so please follow the link to open a Freetrade account. That's what I'm using in this video, and you can get a free share worth up to £200. Which is a great start to an investing journey if anyone's interested in investing. Today I'm just going to be going through my Freetrade portfolio, my weekly Freetrade portfolio update. I'll be going through anything, what's gone up this week, what's gone down, the overall portfolio performance of both my stocks and shares ISA with Freetrade and my general investment account. I'll be going through what I've brought this week and what I've sold. I have sold one stock this week, and I'll explain to you why I've sold that stock in a little while through the Freetrade portfolio update. So let's just get started now on the update. It's been quite a good week in my ISA account. I haven't got any fallers this week in my in this account, in this portfolio. And as you can see from the 7 days, if it comes up, yeah, I haven't added any money in this week either. So I think from the last portfolio update it was about 2,000, around about the 2,800 mark, and it's gone up to the 2,940. So it's increased by £140 in the last week alone, which isn't a bad rate of return. And this is mainly due to the biggest rise this week was Tattoo Chef, and if you've seen my previous 2 portfolio updates, Tattoo Chef has had a couple of been the worst performer for the last couple of weeks. I think it dropped from about $23 a share to about $20 a share. So he had a couple of, 10% and 5% dips over a 2-week period. And it's gained over nearly 7% this last week. So it's had a nice little recovery. No major news on this stock. I own 74 shares, and I'm currently nearly 16% up on it, and £157. I haven't brought any of this for a while. I think my average buying price for this is about $18.50 a share. The major news on this company over the last week or so, I mean, it's well covered on YouTube. There's plenty of YouTube channels covering Tattoo Chef. The major news on this company is that it's rolling out into Kroger stores, which is the second largest food retailer, whole food retailer in the US, which is behind Walmart, which has already had a great rollout in Walmart, and obviously it's been described as the best frozen launch in Target's history. And yeah, it's well on its way to getting into many stores, and that's how it's going to increase its revenue. And obviously it's building up, making acquisitions to be able to supply all these stores. So yeah, that was positive news for Tattoo Chef this last week. So yeah, it's a very up and down stock. It moves quite a lot on negative news. The only thing I will say is that the company, it will get better with its communication over time. Obviously getting these things out to the shareholders, the information the shareholders need, but it is a relatively new company to the stock market. So yeah, it's I'm looking at it from a venture capitalist perspective at the moment. Obviously I haven't got as much data as I have on these well-established companies to find out, like return on equity and having enough sales and revenue growth. There's not that history of 5 to 10 years revenue growth and stuff on this company at the moment. So I'm looking at it from a venture capitalist perspective. So yeah, Tattoo Chef. Yeah, I'm happy to hold that. I'm glad I held it through the dip, because it's recovered quite nicely there. And the Kroger store rollout is a massive bit of news there for that company. Then my second biggest move of the week is Facebook, and obviously it's nearly 4% up this week. I think its highs was $357 a share. And yeah, the news this week was obviously that the FTC's filing against it about its monopolistic practices was thrown out by a judge in court. It's not over yet because he's given a chance to appeal it, and obviously there's always, I think big tech like Facebook and stuff like that, these companies are that big now, they're always going to have some sort of, someone, trying to, sue them for whatever reason, whether it's monopolistic practices or privacies or stuff like that. It's just a risk factor when you invest in Facebook shares. But it's always been selling at a bargain price, and it's nearly tenfold since its IPO in 2013. So it's nearly 1,000 times what the share, 800% to 1,000% up from where it initially landed on the stock market over the last 8 years. So that's an amazing rate of return. Yet it's still trading at a PE of 30. So it's still under 30, 29.37. So it's still a relatively good bargain for a company like this. I mean, like when you look at Amazon's trading at 66 times earnings. So Facebook's still trading at a really, really cheap value, and that's amazing for the amount of growth that it's had. Obviously, it's never had less than a 20% growth every quarter. So it's just an amazing company. It's just a beast of a company. And I think the fact you've just got such a margin of safety built into the price that even now, even with the last couple of weeks, since I've been investing in it for the last 6 weeks or so, 5-6 weeks, it's gone up about 20%, has it? Obviously, I've brought in at different prices, so I'm only about 13% up. But yeah, it's gone up from about $300 a share to $350 a share, and it's still quite relatively cheap for a big tech company. I own 4.8, nearly 5 shares of this company in this portfolio, and I'm sitting just under 14% gain here, with £151 gain on this particular company at the moment, which I'm happy with. So that's my second biggest riser of the week, and mainly due to the news of the judge throwing the FTC's claim out, but he's given them a chance to appeal it. So obviously I know that's gonna bring more. They are gonna come back with an appeal. So we'll see what the share price does with that. But I'm happy to hold that for a very long time. Facebook's an amazing company. I think it's going to do wonders in the future, and it's going to be worth more than it is now in 10 years' time, no doubt about that. In my personal opinion, it's not that financial advice, but that's what I think. But I'm pretty sure that Facebook's going to be worth more in 10 years' time than it is now. The stock I've sold this week, obviously I hadn't talked about. I've sold Naked Wires, but I only owned about £100 worth of, £90 worth of shares in that company. I was looking to build a position like I have in Facebook, Tattoo Chef, and I'm doing Salesforce and Boohoo. I got in at about just over £7 a share, but it shot up to £750 a share, and then it shot up to £8 a share. And I thought, I don't want to be averaging my price up when I already thought the evaluation was quite frothy on it. I already thought it was quite a frothy stock price, share price. So I decided to sell out of that and just put all my money back into a company that I thought was relatively undervalued compared to all the other companies I'm holding in the house, and that's Boohoo. So I put all the money back into Boohoo, and I bought my Boohoo position up, which I think is probably the best value for money out of the three at the moment, because it hasn't really done anything since I started buying into it. It's sort of, over the last 7 days, it had this dip here when I sold Naked Wires and brought into it, and it's gone back up, but it just pretty much going between the £3 mark and the £3.50 mark, and obviously that's because of we all know about the negative news that's always in the papers with it, and until its agenda for change is completed and there's no change required, I think it's always going to have a bit of a rocky road on the stock price. But it is still a great price, and I'm looking to hold this for the 10 years, the next 10 years or so, and I think it's going to be a good multi-bagger over that time. It's not really, I own 93 shares of the company now, and it's not really done anything. I'm just pretty much level on the stock. I'm just £1 down, just over £1 down on the stock. So yeah, I'm looking to buy more of it, to be honest with you. I'm looking to aggressively buy and build up my position to get it to around the Tattooed Chef and the Facebook mark. But if it carries on staying in prices, I'll keep on building the position. I mean, its company's grown, its revenue's grown, its profits have grown over the last 2 years, yet the share price is still the same as it was 2 years ago. So I think it's a great buying opportunity for this company. And then obviously I haven't brought any to Salesforce, but that's also gone up to just gone up 1% this week. So they're all gainers in this portfolio this week, which is amazing. It doesn't happen very often where all of my stocks go up, and it's been a pretty good week. So yeah, I'm sitting on a £227 increase on my portfolio, and I'm happy with that. I'm happy with that, and I'll be looking to deploy some more, buy some more shares, probably build up my Boohoo position over the next few weeks or months or so. And yeah, so I'm happy with the portfolio this week. If we just have a quick look into some insights, obviously the portfolio performance since June the 1st is 5%, but I'll click onto these. Let's quickly go to sector. Yeah, tech's 50%, foods and drinks gone down to 40% now. I've sold out my naked wines. Fashion's gone up to 10%. I've bulked up my Boohoo position. These are all sectors I understand, the companies I understand. Quick look. Money weighted return. Let me just move that. And I'll do that from the start. I don't do that from the money weighted return. I've got a 14% return since I started investing into stocks and shares also, which I'm pretty happy with. And like I said, when I underperform, when the market's going down, I underperform the index. Well, my benchmark, which is the FTSE World ETF. But when the stock market's going up, I outperform it quite generously because of the type of investments, the type of stocks that I'm investing in, growth stocks. But I'll try and invest in growth stocks that are trading at below their intrinsic value. And over the last week, as you can see, I'm 9% up, which is an amazing return over a week. And the FTSE World All ETF is 4% up. So, I've quite outperformed my benchmark there, which I'm more than happy with. And then just go back to the portfolio. Just a quick look into my general investment account, which I hold Alibaba in. This is the only stock that hasn't performed this week. I hold Alibaba in this portfolio because you can't hold Alibaba in nice and Freetrade. So that's why I hold it in this general investment account. I'm happy with my position size. The last 7 days, I am down 3%. It had a great week the previous week, where it shot up from about $211 a share to $230 a share at its highs. So I'm pretty happy, but I'm happy the price is going down because I still haven't finished filling out my position because I think this is vastly undervalued, and I think it's a massive in the future. It's going to take a while, but I'm looking to hold this for 10 years as well, and it's going to be a massive gain for me in this portfolio. I think over time, I think it's going to be a multi-bagger in the future because it's well undervalued. There are risks with it, obviously delisting, and obviously it's a Chinese Asian stock, and obviously the government getting involved. But I think it's like Facebook. There's always going to be government and risks factors, but I think they're that good at companies. They're just cash machines. They're still going to perform well over a long period of time. So the share price is going to follow eventually. Because as Warren Buffett says, or was it Ben Graham, he's meant, or the stock market is a voting machine in the short term, but a weighing machine in the long term. So news and stuff will affect people's fear, and they'll sell out of companies in the short term. But over the long term, earnings and revenue, they win out. Obviously, the biggest risk with this is delisting, but I don't see that happening personally. And then I've had one free share this week, which is Says a Stone. Don't know nothing about the company. It's $14 a share, so that's a £10 free share, which I'm more than happy with. And I will be selling that and adding it to my cash position in this portfolio. So yeah, overall I'm pretty happy with the two portfolios. And I'm currently nearly £200 up. I've only been investing in these portfolios for 2 months now, so I'm pretty happy with how things are going. If you've got any thoughts or comments on the portfolio, you've got any questions, please drop a comment in the comment section of this video. Smash the like button, please, as always. And if you're new to the channel, please subscribe to the channel. Hope you've all enjoyed this update. Peace out.